Ladies and gentlemen, big news from NIO, profit goals and game-changing models. Learn how NIO plans to achieve profitability with innovative vehicles and a strong international strategy. NIO has just released its earnings, and the updates are nothing short of groundbreaking. CEO William Lai confidently announced that NIO is targeting profitability by 2026, a pivotal milestone in the company's journey. Revenue for the quarter came in at $2.6 billion, aligning closely with expectations. However, SG&A selling, general, and administrative expenses rose due to ONVO store expansions, contributing to a net loss of approximately $700 million. Let's dive into the key insights shared by the CEO during the earnings call. In October, NIO achieved an average cost saving of around 16k RMB per unit due to reduced incentives. While this temporarily impacted demand, the company has observed a strong recovery since then. Addressing concerns about ONVO's influence on NIO's sales, internal research showed only a 2% cannibalization rate. This means a negligible percentage of customers canceled NIO orders to purchase an ONVO vehicle instead. The ONVO L60, built on NIO's latest technology platform, has faced some production ramp-up challenges due to new processes. Despite this, progress has been in line with expectations, and NIO anticipates delivering 10k units of the ONVO L60 by December. Temporary dips in demand for ONVO were noted, largely due to late orders and concerns about missing year-end government subsidies. The CEO stated that 50 to 60% of recent cancellations were linked to this issue. NIO's Q4 margins for its primary brand are expected to reach 15% and could climb to 20% by 2025, a significant improvement. ONVO's margins are currently low due to incentives, but NIO forecasts that at 20k monthly deliveries, single vehicle margins will turn positive, with overall margins reaching 10%. Eventually, ONVO is projected to achieve a 15% margin. NIO's SG&A expenses are set to rise further as the company ramps up its retail presence. The number of stores is expected to grow from 190 to 300 by the year's end. Similarly, R&D investments will increase, signaling NIO's commitment to innovation. The company aims to achieve stable production of 20k units per month by March 2025. Exciting developments are on the horizon for both NIO and ONVO. By the second half of 2025, several second-generation models, including the ET5, ET5T, and ES6 will transition to third-generation platforms. ONVO will debut two new SUVs in 2024, a 6 to 7-seater and a large 5-seater designed to compete with the Li Auto L7 and L8. These models will feature strong cost measures, enhancing their competitiveness. The Firefly sub-brand is poised to launch in 2025, representing a new growth phase for NIO. The company aims for a remarkable 100% year-over-year sales increase. In Europe, NIO's strategy focuses on building brand recognition and a robust sales network, particularly in tariff-affected regions. Norway, however, remains unaffected by EU tariffs. Interestingly, ONVO is expected to play a pivotal role in Europe, with its swap stations eventually supporting NIO's growth in international markets. NIO's Q3 margin improvements were driven by cost reductions in batteries and parts. As production scales up, these efficiencies are expected to yield even greater margin improvements in Q4. Positive cash flow is anticipated, with no immediate need for additional funding. The recent investment by NIO China government was initiated by the authorities, reflecting confidence in the brand rather than financial necessity. ONVO's test drive conversion rate has surpassed that of NIO's flagship models, demonstrating strong consumer interest. The ONVO L60, in particular, has captured attention, with many potential buyers previously considering Tesla's Model 3. This highlights ONVO's ability to attract a diverse customer base. The CEO exuded optimism about NIO's future, envisioning a transformative growth phase by 2025. The company is on track to double its sales year over year, with profitability forecasted for 2026. While current losses are significant, the long-term outlook remains promising as sales stabilize, margins improve, and efficiency increases. In summary, despite challenges like rising costs and temporary demand dips, NIO is positioning itself for substantial growth. With the introduction of new models, the launch of the Firefly sub-brand, and a robust international strategy, the company's future looks incredibly bright. By 2026, NIO aims to transition from a high-growth company to a profitable industry leader. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.